Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is live Forex market review, so let's get into it. Before we do, if you can read through the disclaimer, that would be great. Anybody on our YouTube live stream, I cannot see the chats. If you want to be able to talk to me, you must come into the webinar. So I've given you a link there that you can come in and register. For everybody else in the webinar, then we have the chat box open or the Q&A box. Just put your questions into those. All right, I think we'll move along. So if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time Forex trader. I've been trading now for more than 15 years in the Forex market, mentoring for more than 10. If you want to contact me about the webinars, my email is there, duncan.cooper@acy.com. If you want to connect with us through the week, go to our website, acy.com, Market News tab, or our YouTube channel, ACY Securities Australia. If you want to connect with me directly, just head over to my Linktree page. You can connect with me on social media there. If you want to get access to the charts, layouts, and templates that I'm using in MT4, then just contact Nathan.bray. I'll put his details in the chat now. Any questions about a demo account or a live account, or if you want to talk about the webinars, you can speak to Nathan. He'll be able to help you out. All right, his details are in the chat. All right, let's get into, first of all, the news. Of course, early this morning, we had the US FOMC statement. Let me just, this is up to date now. Time shown here, my time, Queensland time. This is at forexfactor.com. I really just focus on the red items. So we have had the federal fund rate FOMC statement, FOMC press conference. No change in interest rates, and the Fed definitely said that there will be no cut in March. Expecting that at some point maybe they will be cutting in the year, but given no real indication as to when. And that was kind of US dollar positive. That's how the market reacted ultimately. So that's that. We do this evening, 10 p.m. Queensland time, have the UK for the pound crosses. That interest rate decision, not really expecting any change. They may be looking at the voting, how they voted for coming up with a rate. And we'll have a press conference at 10:30 p.m. from the BOE Governor Bay. Later in the day, US, 11:30 p.m. US unemployment claims. 1 in the morning, ISM manufacturing PMI data. And of course, tomorrow evening, we have the US job figures. And into Saturday morning, the revised UOM consumer sentiment figures. So there's still plenty of figures to come out. Most importantly at the moment, the pound interest rate decision, okay? I am short the pound, so I'm hoping that will not be going up. All right, let's get into the charts. So we're into a new month now from last month. So if we look at the dollar index, from the monthly chart, I've been discussing all month in January, were we starting to form an inverse head and shoulder pattern here? We may have already or almost taken out the high of last month, January. So you can see there, we've kind of got railroad tracks. Is that a right shoulder forming? Are we going to continue up maybe towards the 127 extension over time? That's going to probably take at least 2 months, if not 3, to get up there, unless something dramatic happens. Yes, it could get there this month, but if it's going to keep going up at the same rate it did last month, it's probably going to take at least 2 months, if not 3, to get up to there. We'll have to wait and see. That's assuming that it can get up there. So are we forming a head and shoulder pattern there? It's becoming a little bit more possible. So the weekly chart, we're starting to close above weekly resistance now at 103.60, potentially. So on the day chart, we're closing above, or well, we're not, we're actually trading above today. Haven't closed above it for a good 2 weeks here, but we are trading above it today. Are we going to take out these highs today? Which will, of course, be bearish for the pairs to the US dollar. Okay, so still higher top. This is another higher bottom coming in here. So it's just telling you that The underlying trend is up there on the dollar index. So it should be down for pairs versus the US dollar, and the opposite for pairs to the dollar. If it's a dollar and then a currency, they should be going up in general terms. Although, I don't know if that's quite true, maybe on the franc and the dollar yen, maybe it's not quite true. All right, S&P 500 with the Fed not saying that we're going to get a cut anytime next month, then we have a sell-off, but this is still in an uptrend. We are above the all-time high, which the all-time high is this over here. So I've been saying, if you want to get along this instrument, if you're wanting to take a long position, price really needs to now hold above the high. That's at 48.16. So at the moment, fib drawn across the most immediate range on the day chart. 62 levels at 47.97. Yes, that high is at 48.18. So I've got the area highlighted in there. Price, it's okay to stub below the high. Could come into these highs here. But, if you want to be a buyer, you want to buy a dip, and that's the most logical point where the market should get support if the buyers are in control and want to move this way beyond the all-time high that was. Okay, if we come down and we can't hold this area, that's going to be potentially a reversal on the card. So this is the area to watch if we can pull it down into this area. All right, euro dollar. This is my 4-hour chart. This was the range. Well, that was last week's high. We broke the low, so I dragged my fib down to the low of this week, and we rallied back up yesterday to the 62% area, this 4-hour top. Rejected. This is a daily resistance area at 108.76 as well, today chart. This area here, so it's really broken support, become resistance. We have that range, day chart, lower top, lower bottom range. Found at 62, now it's heading down towards the 127 extension, which overlaps with some form of day support here. So I would anticipate we'll maybe coming down into this area. Could come down to the even lower area at 107.23. Maybe on the job figures, but then you're probably going to bounce because now you're then looking at the next rally, because we are most definitely, excuse me one moment, we are most definitely getting into the profit taking phase shortly. We've get my drawing tool to work. We've moved down, we arrived to 62, 127 extension is really the target. Before then, you're looking for the next rally to try and break through this area. Now, it may just break down and through without a rally, but once we get into the profit-taking area of the fib tool, I expect then that people are taking profits. If that overlaps with support, then it's a very logical area to expect a bounce. So we're very much in the latter end of the move down here at the moment before the next rally. Sure, it doesn't have to rally, but you always have to, to get short, you want to be getting short at the 62 to 79% area, targeting the 127 extension. So that occurred yesterday, so we can't go back in time. All right, so 4-hour chart. Now you could watch, there's a range here that we could come back up. Keep dragging the fib down until we get a bounce. And then at the moment, if that is the low, 62 level, now on the rally, overlaps to 108.44 broken day support. So that would be, at the moment, a very good area to watch for a rally back to if it was to happen. Now, when I did my webinar on Tuesday, I think price was down here. And I said, sometimes I have to wait 1 or 2 days for price to come back up. If we're in a downtrend, I want to sell a rally, so I have to wait for a rally. So the rally came yesterday. But up here, you started, you needed to get yourself set up here if you wanted to trade this pair to the downside. You don't want to be selling at the bottom of the move. So now I'm having to wait for a rally. So, this would be a great area to look at around about the 108.44 level. All right, Euro yen, same real commentary. It has had a very nice move down. If you've been following me, I said I got short up here at 161.24. Up in this area, I had a 100 pip stop. Went against me, didn't stop me out. And now I'm out, I'm up. I have seen 300 pips at the moment. And I'm looking for this, if it can play nicely, this sort of pattern to form. So I'm trying to target down here, which would be great. That's like 1100 pips. Price was to get down there. So I'm going to have to obviously manage the trade, but I'm looking to see if this can start to break down the range. So that's the general structure I'm looking at, maybe mapping out long term. I was just in an area of support here where we could most definitely bounce, but we have a lower top just there. We had a little lower bottom here. We got an inside move up, down. So at some point, this will maybe have a rally unless it just lets go and doesn't want to rally at all. So, if you're not already short, you really need to wait for a bounce. And that's just a question of monitoring the 4-hour chart at the moment. Lower top, drag it down to the low. And keep dragging it down if the price keeps moving down. But, you want to look for a rally back up to 62.79. If that is the low, 79% level lines up with the area of resistance here at 159.75. It's a weekly high point that we've moved below. Whether or not we can really get up to that high point, that's like 140, 50 pips away. Don't know whether we can get up there, but that's really what you'll need to look. You want to sell rallies. This is just put the fresh low in at the moment on the current 4-hour candle, so I don't want to be selling it at the bottom of the day. Need to wait for a rally. So draw your fib in and wait for the next rally to occur. Euro pound. Right, this was the area I was watching to be resistance. Yes, we did come above. And we're actually in an area of weekly support at the moment, so it's not the best pair to be trading. There's weekly support here that we've traded below, but then we've got all these weekly lows here down to 84.92. So this isn't where I would like to be selling. Just to prove the point, we moved down to a lower bottom here. We rallied up to the 79% level. This is where you take your position. And down here is where you take your profits. Now, price can still continue to move down, but it's less probability in terms of just starting a position. If you start to see down in this area here, a clear daily chart reversal, then we're probably, it's got a message. Hi, Zoo. We're in the latter end of the move down at the moment. The 127 extension overlaps with pretty much weekly support. So price doesn't have to get down to 127 extension. This is support between 85.43 down to 84.92. So I would start to monitor for the next rally phase. Doesn't see the trends changing. This keeps moving down, drag the fib down, but I would anticipate now that this move down here is almost finished, and then you're looking for the 62 or the 79% retracement before the next move down. All right, it doesn't have to rally, but you just have to be aware that we're in the profit-taking phase now, where people will definitely be, if they've got short up here, they're starting to take profit here, which will cause buying pressure. All right. So monitor to see if you see a reversal pattern down here. Personally, I would at least now be waiting for price to come up This would be a good level to watch. This is a weekly area of old support, E609. Became good resistance through here. That's a nice high up level away from this area of support that you could look for your setup to sell up here, to then see price is then going to turn over and try to break through this weekly area of support here and break below 84.92 for the long term. All right. I never engage at support, never selling at support. I have to sell a rally if the trend's down. Okay. Pound dollar. All right, I got short up here last week. Said, look to sell a rally on this pair. Yesterday we came all the way back up. So that's the high of last week. The low from this week at the time that I had the fib drawn and came up to 79% level yesterday, overlapping with daily resistance, fraction short of this rally point. That was where you should have been looking yesterday. Now we're in the, we're almost down to the 127 extension. We've got the interest rate decision coming out later. We could definitely see a move down into this area. But then, does it break down and follow through? Or does it hold here for a bounce? Again, say at 79% level, profit taking at the 127 extension. So there's not much room left. This is, if we're going to take profits at the 127 extension and see the next rally occur, there's only this area left. And we don't know what's going to happen when the Bank of England does its interest rate decision this evening. So you can't really open a position right now to go short, because you should have really been looking to sell higher up in terms of creating a high probability trade. The more you're selling as this is going down, it becomes less and less probability for success, because you're getting closer and closer to the bottom. And as well, in this area here, you've got this area of support, this area of support, and all this support here as well. So you're coming into a known area of support. We could just stay range bound on the pound dollar for the next month. We're pretty range bound all last month. That's last month's high. That's last month's low. So once we come down, maybe we can test last month's low this week, but we may well see a bounce there, back up. So at the moment, the bias is maybe to the downside, but you have to sell a rally. So I would just be putting my fib now from there to here. Keep dragging it down until it puts the bottom in and look to sell the next rally. And that rally may not come now till next week. What I like to do is put a fib across the range of last week. So last week's range was there. Put a new low in for this week, so the range becomes there. And it took till Wednesday, so 3 days of trading this week. That was the optimum time to get short. So it may not be till next Tuesday, Wednesday, where it has a rally to give you the next optimum time to get short. So draw the fib in and wait to sell the next rally when it occurs. Don't be selling into support. Now, of course, whilst the general bias, that's lower. Well, that's lower to there. That is lower to there. That's lower to there. That's lower to there. So this may come up, put another lower top into this one. But of course, if we do get support down here, you might want to look to trade up. So support at the moment, quite clear, would be at 26.11 down to 25.96. This area here could be support for then a move back up if you're prepared to trade up on this pair. That would be the area to watch for support to come in. Do you see yourself to buy down here? Or do you want to wait for the next rally to finish wherever it comes in? All right. Okay, pound yen. The big question is how big a reversal are we going to get from this potential double top? Are we going to see a major decline? Double top pattern is here. If we can break here, long term, target for the double top is down here at 168.03. That is miles away. It's like 1700 pips, I think. My maths is good, approximately. So looking for an opportunity to get short. I did say on Tuesday, if we break 186.75, this weekly top, broken support, look for it to become resistance. So in a perfect world over the next few trading days, can these come back up to this area to be resistance for then the next move down? All right. It's a patience game. You know, this has had 2 good trading days down. Do you want to be selling at the bottom of the second day? You'd have to put your stop above the outside candle up here, really, to be, and that's a long way away. So to the 4-hour chart, you know, get your fib drawn in on the 4-hour swings. That is actually the outside day down to the low. If that is the low, and I don't know if it is, the 62 level overlaps nicely with the 186.75 level, but you're going to have to watch. Keep dragging the fib down and price keeps moving down and look for a move back to the 62.79% area. Okay, sell a rally. Now, over the last month, on all these yen pairs, I've been showing opportunities to sell. I'm pretty sure I discussed this sell option up here, 79% retracement. You took that opportunity, it'd be happy days now. All right. Aussie yen. All right, so I've been saying through the last month, I got short this on the first day of the month, first trading day of the month. And I'm thinking this is going like so, or it could even go deeper, but that's how I'm generally expecting things to run out. And I got short, I think I got short here. I tell I didn't get short the first day of the month. I was trying to short the Aussie the first day of the month and missed by 12 pips. I got short in here. Got short that day. I'm going to stop 100 pips above, waiting for this to see if it can break down. Now, I've been discussing I pretty much shorted the 79% level, 97.55 I got short at. Now that level's been tested numerous times. Last week I said it might retest it, and it did. And of course now it is breaking down. So, you know, it's not the perfect spot to sell. Should have been selling up here on a rally. So now you're going to have to wait for the next rally, logically. Don't know whether it will rally all the way back up to like the 62.79% level. It may only have a short-term bounce. You're going to have to monitor it, but you don't want to be selling at the bottom of the current move. We're just contending with last month's low, so we are having a month down this month. And it is actually worth going to the monthly chart because we potentially have, like I was just showing you, the day chart double top on the pound yen. We may have a major monthly top here, which could see a very much long-term double top form, and the target for that would be right down here at 73.67, which is obviously miles away. But if you're already short, I mean, I got short at 97.55 at the moment. This starts to break down. That is the long major target, maybe for the next 6 months, down at 73. So that would be like 2,400 pips. All right, so at the moment, that could be the major pattern. At the moment, I'm looking more, this is down, rally down, then it might come back up again for another rally. It's going to take a while to get down to that major area if it's a major move for the year. So at the moment, I would, you know, as I was saying, just monitor the opportunity for a retracement to occur. Okay. and may need to give this 2 or 3 days to, offer you the opportunity to rally at some point to an area that you're happy with. All right, I would just be simply watching 62 to 79% area. Let's say we kind of hold at last month's low. I would look up here. If we clearly break below last month's low for a couple of days, then maybe and price significantly breaks this area, then over the next 3-4 trading days, we may see a rally back up to that area to be resistance to continue the decline. So its first question will be, what does price do here? Does it offer a nice retracement or not? It's always difficult when you're next to patience again, because a lot of these pairs have dropped. You have to wait for a rally. All right, Aussie dollar for the last 2 weeks at least, struggling from 6600 to 6620. All right. Yesterday got up to 6624. Potentially now we may have broken out this area of consolidation, but we are, it's very difficult at the moment. We can probably all guess which way the Aussie is going. It's going down. Getting in and not buying not selling the bottom, because we're into support at the moment. We're actually never got up to any levels that I was hoping it might get to. We're into weekly support at the moment here. Now this may just break straight down through. We're having an outside reversal week to the downside at the moment. But, I never selling to support, and we're at support at the moment. So it's in a very difficult area just to go, okay, I'm going to sell. If you sell here, you're going to have to put your stop, about 110 pips up here, really, to be safe. So the logical thing at the moment is the trend is down. Again, look for a rally. That's the last high point. Look to the 62, 79% area for failure. Look to sell a rally. All right, now it may not rally because we don't know what the job figures will do tomorrow, but if we don't rally and we break below 65.22, 65.11 over the coming week, look for this area then to be resistance once we break below to continue that move down. All right. So another game of patience at the moment. Now, if you're more bullish, I'm bearish because I think this is a lower top forming on the monthly chart. Okay, and we have actually traded below last month's low. So that was a monthly reversal down. We're having another month down into February now. So this is becoming a significant top. This is probably a lower top forming on the monthly chart once more. So then logically, are we targeting down here last year's low to move down through that area? So it's a question of finding a rally point that you like, that you could be selling at. Now, depending on the job figures, this could easily come back up to 66. All right. This is still very much range bound in this area at the moment. And we could see another bounce back up. We have the interest rate decision coming out as well next week on Tuesday, which is expected to be no change. So, all right, that's my thoughts on the Aussie crosses at the moment. And New Zealand yen. All right, I've been bearish this pair. This is how I had it drawn from last week's high, last week's low, and I had that range drawn in last Thursday, and I said watch this area, these two highs at the 79% level. I actually came up to the biggest 79% level yesterday, but again, it's been testing it through this week at this level. This was the level to sell at, 90.57, stop above the high. And now we're at the 127 extension of that fib. So logically, you're looking for the next rally to occur Again, I would look for the next 79% level. So draw your fib from high to low, keep dragging it down if it keeps moving down. And then look, this could still come back up to this resistance level, 90.42 if it wants to. That's the 79% level for then the next decline. I would watch the 62 to 79% area on all these drops that we've been having at the moment. All right, New Zealand dollar, very much like the Aussie. This came into the area that I highlighted on yesterday. Back up to the 62% level of the major range. So the major range is from high to low. Broke below the 62 level, it's become resistance here. Didn't quite get to the daily resistance level. Broken day support. Close, that was the highlighted. It's still very choppy in here. Very much like the Aussie, it's on support. But, this is what the Aussie looks like as well. We have a lower bottom forming a lower top to continue down. But whilst, if you're prepared to have like a 200 pip stop or something, you could sell now, put your stop above this high, and you're waiting for this to move down long term, but that's quite a large stop. So really, you want to look to sell a rally. This may bounce in this support area. Look for our chart. And you could be drawing a fib across this range. That's a lower bottom on the 4 hour. And once more, wherever the low comes in, drag the fib down to and look back up to these highs here. There's an overlap with the fib level 62.79% area, because that would be the logical area to watch for failure on a rally. You want to sell a rally on all these pairs that are going short. Look to sell a rally. Don't look to sell the bottom, thinking you're missing out on the next 200 pips that are going to happen over the next 2 days. They may not move down 200 pips over the next 2 days. They may rally back up. They've already had a significant move over the last 24 hours. All right, dollar Canadian. All right. If you're with me on Tuesday, I definitely said watch weekly support here, 133.79. Would that be support? So on the weekly chart, I was looking at, would we just have a week down, bounce, hold at support? It's looking like we're reversing off support here from the weekly perspective to maybe put in a higher bottom here to continue up the range. On the monthly chart, this is like the dollar index. Left shoulder, inverted head, right shoulder. Are we coming up this way, or at least to come up to test these highs up here? All right, so by the end of the week, we'll know if this has been a reversal week. It's kind of looking like it. There's a candlestick pattern. I went through candlestick patterns yesterday. This is the piercing pattern of sorts. It's almost an engulfing candle as well. It's already broken it. So just from a pure candlestick pattern, if you want to trade just candlestick patterns, it's reversed at support. Your entry is a break of that candle. Stop below the low. And I would be looking to target up there. Well, first target would be 136.54. This area of resistance over here, but in general terms, up from where we traded down from. Okay. All right, so there is a trigger there from a day chart perspective. If you want to trade off a lower time frame like the 4 hour chart, you need to look for a 4 hour dip. So the opposite to what I've been saying on most pairs, drag the fib up, wherever it tops out, that's where the fib's positioned, and look for the 62 to 79% pullback. Could be a little head and shoulder pattern could form here, left shoulder, inverse head, kind of right shoulder form there, the 62 area. So that area is approximately 133.96, so around about 133.4. Sorry, around about 134 is the 62 level, and that left shoulder there. If it can, map out like that, but keep dragging the fib up if the price keeps moving up, and look for your pullback. All right, dollar franc. Oh, that was just perfect. Last week and on Tuesday, I said this range here, 62% level, overlapping with this monthly support level. I go to the monthly chart. That's the false break level. We've been false breaking on the monthly chart, holding it, rallying back up to the area of broken support here, 86.99. And on the day charts, we come back down to support and a 62 level of that range. So potentially that may be the bottom there for a continued move up. Now, it may offer you a dip on the 4-hour chart. Now, from a candlestick pattern perspective on the day chart, there's really kind of a hammer. Be nicer if that body was a little bit higher up, but we've broken the high, so that would be a trigger to go long on a day chart, stop below the candlestick pattern. And I would be then trying to target, if we're getting a major US dollar strength coming in, can we come up, long term? So on the 4-hour chart, just put a higher top in just on the 4-hour chart, so this could come back down. And you could be fishing down here at the 62 to 79% area. I much prefer the 79% area, but whether or not you can get down, see all these lows here. We had a false move below. This may only come back to all these lows here, which is last week's low. So this could come down to 86.06 down to 8600, and simply not want to go any lower than that. So that would be an area to watch. And the perfect world down at the 79% level at 85.71, but I don't know if it would play that nicely. Okay. Dollar yen, it's a little bit choppy. It really potentially maybe wants to go down, but US dollar strength's coming in. So what we're definitely seeing on the weekly chart here is this a double top where we couldn't quite take out last year we couldn't take out the year before's high. We broke down to a lower bottom on the weekly chart. This is probably a lower top forming on the weekly chart here. We're having a week down. And on the day chart, we have a lower top, lower bottom. So this actually maybe needs a rally now because we're at the 127 extension just here. So it was a 79% retracement, 127 extension moved down. So now you want to look for the next rally. It doesn't have to rally if things are very, strong for the yen at the moment. This could not rally, but logically from that lower top on the daily now, keep dragging the fib down and look to sell. This was an area I was watching on Tuesday, but it never quite got there. All right, so from there to there, logical, the best level would be up here at the 79% level with all this 4-hour tops here and here, 147.83, but look to the 62, 79% area for a rally, if it rallies, that is, for it to then turn over again. All right, it's always a game of patience. You can see here, drop, rally, drop. Can it rally to continue this kind of pattern? All right. Sometimes it doesn't rally. It'll just keep moving down, but it's very difficult for me to sell at the bottom of a move when I know usually it will rally back up. If you sold here, you have to weather all this pullback. All right, again, on a negative pair, look to sell a rally. Gold, don't really like gold at the moment. This is how I was kind of discussing on Tuesday. On the 4-hour chart, it said looked for a 62.79% pullback. That area got tested twice between 62 and 79 of that range. Well, really it got tested once before then it moved up to a fresh high. So really the fib at the moment would be drawn now from there to there. And that came into the 79% level. Now we're seeing if this is going to continue up after that dip. The problem at the moment is your weekly support's down here at 2009 and weekly monthly resistance up here at 2070 to 2079. And in terms of the range, we're kind of pretty much in the middle. So when something's range bound, trading in the middle, it can go either way in the middle. You want to be looking to be a buy down at support. I discussed that area last Thursday, just here. Or you want to be selling down from resistance. So at the moment, it's right in the middle. It's not perfect at all. But clearly it's held at support here. So potentially it's moving up to resistance, but this is not the ideal place to be engaging in gold. Should have been looking to trade at the lower end of the range, which we're not at the moment. All right, so you could still be monitoring as this moves up for 4-hour pullbacks, but the pullback has already occurred at the moment. This spike down here was the pullback, and now it's already on its way up. So it's not ideal at the moment, and it's in the middle of the range. All right, and Azu, you want me to look at NAS100, so we'll just finish with that. All right, so we're above the all-time high. Month up last month, monthly trends up, the weekly trends up. Having a week down, I'd be monitoring this weekly range for a pullback for the next advance. All right, so the all-time high, this is that line just here, which is about 16757 approximately. Overlaps with the 62% level of this range for the weekly range. Okay, so the logical level would be, is this going to pull back and then hold at the all-time high in the 62% level just here? All right. From a day chart perspective, potentially this is a lower bottom here, a lower top, and we're moving down. So, but we're getting the lower top, lower bottom on the day chart at the moment because we're having a week down, but the weekly trend is up and the monthly trend is up. So it's a bit of a hard ask at the moment to say let's short the Nasdaq. If it can't hold the all-time high that was, breaks below this area here, then potentially you're looking for a reversal. At the moment, this is just corrective before potentially further advancing. So same commentary that I said before on the S&P 500. So we may see a little bit of downtime on the Nasdaq at S&P 500 as long as they hold to what was their all-time highs or a deal above. Then you have to assume that the market's granting support now at the all-time highs for a continued bull market. Okay. All right, so that's my thoughts there on the NAS. Okay, everybody, any final questions? So at the moment, it's most definitely a waiting game. Let's just see. So Aussie yen's just testing last month's low that's broken. Will it offer a bounce for those that aren't short to sell up maybe in this area? Euro yen is having a bit of a bounce on some day support at the moment. It's into an area of support here at the moment, so we could see a bounce here. And so we do, look to the 62.79% area. This is a logical area where you'd expect price to get some support. Doesn't mean we're getting a trend change back to a long-term upward market on the euro yen, because structurally at the moment, on the day chart here and the weekly chart, let me just get rid of that fib. On the weekly chart here, this is moved to a lower bottom. This is forming a lower top. Structural trend here on the weekly chart is down. Structural trend on the day chart is down. But we might need a 1 or 2 days up. Okay. as as we're bouncing on an area of daily support. Do I think the dollar yen will reach 170? I will know, because I think the dollar yen's in a downtrend at the moment. It'll have to break the double top to get to 170 like you're suggesting. Well, the first thing it'll need to do is break whatever that top is up here. It'll have to break 152 first, and it doesn't look like it's doing that, because at the moment, on a weekly chart perspective, like I was just saying on the Euro Yen, where it has a lower bottom, lower top now forming on the weekly, this has moved down to a lower bottom on the weekly, and potentially now this is forming a lower top on the weekly at weekly resistance. So structurally at the moment, it's looking negative. So I know the US dollar strength has been coming in, but as well, whilst that's coming in, as well, the market is starting to potentially factor in that the US may cut interest rates this year. So because we're at such high levels, and even if, say, the US doesn't cut interest rates till June or September, or whenever it is, 5 or 8 months away, is the market will start to price in that potential movement. So we're at very high levels historically at the moment. So traders, whilst you might say, well, there's no change in interest rates, so you should favor the dollar yen moving up, traders are starting to reposition themselves. They're not all maybe the long positions that they took many weeks or months ago. They're turning those positions potentially around for maybe the interest rate cutting that's going to be coming over the year at some point. So if we were to break above this weekly area of resistance at 148.80, then I would have to change my mind and at least accept that we could come up to test these highs. And of course, if we break those highs, we could see 170. But until we can if we break 148.80, I can give that definitely the chance to test the highs of last year and the year before. At the moment, it's not wanting to move above there, so I'm much more to the opposite. That's the line in the sand. All right, the sellers are quite clearly. That was a level. I think we got the level was 148.80, and we went up to 148.80 and 1 fractional pip. It actually traded above there 1 fractional pip. The sellers let it get above there 1 fractional pip before saying, okay, that's as far as you're going. So they're clearly holding that area at the moment. So if they withdraw the defense there, yes, we can come up to here. But at the moment, they're not saying that. It's moved to a lower top, lower bottom. Trend shifting to the downside in the short term, for sure. All right. I think I'm going to wind it up there. Just from the webinar front from me next week, I'm not here next week. So I'll not be back on the webinar front until Tuesday the 13th. Okay. There are some webinars coming in though from Luca and I think Nathan. Maybe Nathan's not. Where's Nathan? Oh, he's here. He's on the 7th. All right, so Luca and Nathan will be on next week. You can catch them. Just check out the webinar page and register your interest if you want to enjoy their company. But I'll be back with you on the 13th, just having a week off. All right, everybody. So just be aware of the US job figures coming out tomorrow evening. That's the next volatile thing. Other than we do, of course, have, what's the pound doing at the moment? We do, of course, have the pound interest rate decision. Seeing a little bit of an intraday bounce just at the moment at last week's low. But, we're pretty much at the bottom of the current week's move. So as I was saying before, look to sell some form of rally. Never selling at the bottom of a move, okay? All right, everybody, have a good trading week over the next week. I look forward to seeing you on my return. Thanks, everybody.